Today, we're going to talk about the importance of having good credit score when trying to buy a house. Some of the benefits of having a good credit score is that you're going to get a lower interest rate, you'll be eligible for more loan programs. This will actually open up more down payment options. Usually, if you want to do less than 20% down, you need to have a good credit score if it's non-FHA program. You get a lower private mortgage insurance, which means PMI, when you're doing less than 20% down on most conventional loans. Having a good credit score usually means that you have very little to no debt, leaving more cash available for the actual mortgage payment. I cannot highlight enough the importance of having a good credit education. You'll be surprised how many times I've had people say, "Hey Hector, I'm ready to buy a house. I'm actually already in escrow," and they're not even pre-approved yet. Here are some of the highlights to keep in mind when you're trying to improve your credit score. Credit utilization is one of the most important factors when we talk about credit scores. You want to keep your credit utilization at 10% or less. This means that you can actually use whatever balance you have, but at the end of the day, you cannot leave more than a 10% balance on the actual credit card. Try not to run your credit often. Every time someone runs your credit, this negatively impacts your credit score. Avoid at all costs applying for credit cards that you don't actually need. Beware of unknown collections. Again, this is very common. We'll have people come into escrow and they didn't even run their credit yet. And when we run, they'll have a small medical bill that was unpaid for. Small things like that can negatively impact your credit score and even put you in collections. And this could be a big problem when you're trying to buy a house. Having a credit card and not using it is like not having a credit card at all. Creditors want to know that you actually know how to use a credit card and are responsible for the credit that they allow you to have. This is where credit utilization comes in. Again, you can use as much as you want as the balance. Just make sure that you pay it down to 10% or less on every bill. Try to pay cash or debit whenever you can. I think we've all been in that situation where we want to buy something, let's say a TV, and you put it on a credit card thinking you're going to pay it off next month completely, but then you leave it on there and then now you saw a pair of shoes and something else, and then that stacks up very easily, and that's how you rack up the credit cards, and now the utilization is high, and this negatively impacts your credit score. When we talk about auto loans, there's a big difference between leasing a car and buying a car. Whenever you're leasing a car and it comes to mortgage purposes, the lease is assumed that it will continue. So let's say you came trying to buy a house with me today and your lease is up next month. That doesn't mean that the liability will leave next month. We're going to assume that there's another car coming in because it's a lease. Now, on the other hand, if you're trying to purchase a car, once the term ends, the debt dies with it as well. So owning a car is better than leasing a car when you're trying to buy a house. Now, lastly, I want to encourage you to speak with the credit expert. At the end of the day, I'm a mortgage professional, but I do not specialize in credit repair. That's something that you always want to talk to someone that dedicates their full time on that. You'll be surprised how very little investment can completely save you thousands of dollars on the long term. If you need any recommendations, I'll be happy to help. I hope you found this information useful. If you liked the video, please like and subscribe. I'll see you guys on the next video.